So, first of all, Joakim, thank you so much for taking the time and joining the podcast.
Thank you so much for having me, Christopher. It's my pleasure.
How early did you find an interest in shipping?
It's a good question. I won't say that it was like from childhood, but I remember when I became a student at the university, like early 20s. I started I started working during the summers, and I had some extra money I didn't spend, so I started investing in shares, equities in Oslo. And some of those companies were shipping companies, like Golden Ocean, for instance. So I kind of, I think that was the first kind of taste. And what I noticed, I remember especially one company, Green Reefers. It's not listed anymore. It was a reefer company transporting bananas from Costa Rica to Europe and so on. I think it's containerized basically now, but I remember I built my first financial model around that company, and I didn't know anything about Excel or financial modeling. I just started, and I noticed that there were some information inefficiencies in the market, so I could kind of predict their quarterly results and make some money. So that was fun. I didn't think too much about it at the time. It was just felt natural to do it. But looking back, it was quite interesting because that's a lot what I did later on.
Interesting. So, when you first sort of stumbled upon it, was there any particular shipping segment that got you more interested, or was it the whole industry as a whole?
And now it was just the listed ones in Oslo because they were available through my internet broker. But I think the industry as a whole, it's kind of the information inefficiency in the market, and also the possibility to kind of to predict with a little bit more certainty than other sectors that kind of caught my interest.
If you look at your education, after studying in Norway, you decided to go to Australia. Why did you decide that, and how did that affect you?
It was so with my studies, I started as in international relations in Trondheim. Basically, that was because it was one of the studies with the lowest requirements for grades from high school. So I and all my friends went to Trondheim. So I basically didn't have kind of a burning desire to study international relations, but I ended up in Trondheim, and I found out then started to invest that international relations are a very interesting subject, but it's not really what I wanted to work with, and that's not where I saw big opportunity. I saw more opportunity studying economics, so I shifted and pivoted my bachelor's degree towards more economics. So I ended up with a dual bachelor's degree from Trondheim in international relations and economics. And then I wanted to kind of study more economics. And I looked at some of the Norwegian schools like NHAH and some others. They had really strict requirements. You need to have kind of this subject and this one to get in. So I started doing some of those subjects, but then I thought, oh, I don't really need those kind of subjects. I just want to study economics because this was kind of law, basic law, and these kind of things. So I asked my girlfriend, now wife, Elizabeth. I asked her kind of what do you want to do? Should we just go abroad or? And she said, yeah, sure. So we ended up deciding to go to Australia because I mean, Australia is a cool country, and this was during the financial crisis, so I basically applied for three different universities down there, maybe four, and I got into everyone. Despite I think at the time I had a C average, so I wasn't too optimistic, but I got into everyone, and I think that was basically because it was the global financial crisis and they needed the Scandinavian money.
So it's okay to say that it wasn't sort of like a master plan from the start.
Oh no, not at all. It was laid as we went.
Perfect. Obviously, we're going to talk a lot about shipping today. If you had a task to learn someone to become great at shipping, how would you approach that task?
We hired Peter Mikael Christensen last year to kind of fill my shoes in Cleaves Securities. So I've basically been doing the exact exercise over the past year now. So it depends a bit on what kind of tasks you want to do. But so for Peter Mikael, we have focused a lot on the company modeling. That's the easiest part, I would say. That's the part that's easiest for most to kind of get their heads around and learn, because there's not that much differentiation between analysts in terms of how good they are on the company modeling. But the interesting part and the part I think is really most exciting is the fundamental research, and that's something you can learn. But I have to admit that I'm not very willing to learn it away, because this is where I want to make. This is kind of where I'm going to make my money, and it's a foundation for all my kind of success in stock picking. So, but that's the key to unlocking the sector, the shipping sector.
But if you look at if you put hard work on one side and sort of the natural talent on the other side, where do you feel like you have to be in order to be exceptional in understanding shipping?
Definitely hard work. At the start of my career, I basically worked 12 hours average. I'm a little bit lower now. I have a family now, so I can't really work that much. But the thing is, you really have the passion, right? So if I didn't have a family, I would probably work much more. Because whenever I have a spare moment, I think about shipping, and I try to work either in front of the computer or in my head. But I think so hard work, but you do have to be quite talented as well. From my point of view, you need a lot of mathematics. But I know a lot of people in shipping, or most people in shipping are not very heavy on mathematics. So I would say there are two ways to make it in shipping. Either do what I've done, kind of the research mathematics part, or you do the networking part and build relationships and go on all these parties and kind of build your network.
Got you. So maybe another question that is interesting is that what are some of the biggest mistakes or the typical blind spots you see in people sort of starting their career in shipping?
I wouldn't say shipping so much. I was rather focused on finance as a whole. I think a lot of people, young students, maybe have some illusions to kind of expecting to get into finance and it's going to be all fun and glory, but it's a lot of hard work, and usually it takes at least 3 years before you kind of see any monetary reward for all that work. So the first, I would say, 3 years, it's hard work and not that much paid, but then it's you get all the rewards afterwards. So it's definitely worth the time. And unfortunately, there are some strong hierarchy in finance, more than you would see other places in Norway. So that could be quite tough for a lot of young people coming into the industry.
Makes sense. Can you take us back to the time you decided to start your own research platform in shipping? Sort of what was the idea at the time? You had a full-time job already. Can you take us back to that moment?
Sure. So I can just quickly, I started in Nordea Markets as a junior shipping analyst, and then I moved on to Furnace. Unfortunately, in Furnace, there were some issues with the people I worked with. So I ended up resigning my job, but I didn't have anything to any other job lined up. So I was quite in the woods basically. I remember I had this Excel sheet calculating how much runway I had before my mortgage were were in what called delinquency or whatever. So I had a couple of years, so I wasn't too stressed. But then I applied for a lot of work, and it was this was in 2014 or late 2013. So the oil price were collapsing. So the oil industry in Norway, everyone was out of work, and everyone was kind of looking into finance to see if they could get some work there. So it was a lot of competition. So I ended up in Santander. I was basically responsible for their liquidity portfolio. So it was around 2 billion US in investment grade papers. It was a great place to work, great coworkers. But coming from shipping, I found that investment grade bonds were not kind of the most exciting thing. The main kind of what we were looking at were maturities and trying to squeeze half a basis point out of our investments here and there, and giving the Swedish state all our money for negative 97 basis points. So it was a different ballpark. But the good thing was that for me, used to working 12 hours a day, now having only to work 7.5, that gave me a lot of time. So I started in the evening, started my own company, Gersemi Research, and I started with a plan. Let's see, I wanted to continue shipping research. Let's see, I just continued doing what I did before. I'm quite good at programming, so I programmed away about half of the workload I used to have, and I didn't have to talk to any clients, so that was a big time saver as well. And then I started to build. I just wanted to build track record. I thought to myself, if the track record is bad, I can just remove it afterwards. But it turned out to be quite good, so I kept it. And then started with target prices and recommendations, doing all those things, and trying to figure out a business model where I can monetize on it. So I tried. Yeah, sorry.
No, I just wanted to ask. So, how did you land sort of the first few clients? Did you build that track record up first and then sort of reached out, or was it people incoming to you?
So the kind of the challenge was how to monetize, what business model. So I tried a lot of different business models. So one of the ones I had biggest hopes were a volume-based, retail-focused business model. So I would basically, I thought I could charge maybe $10, $20 a month and target the US retail market. And then that should be enough for a one-person shop, right? So I remember first I gave it away for free. So I built a list, and then I remember the day I converted that list, and I said, now I need, I don't know the number, I think maybe it was 200 a year. And I had 0 conversions, 0. So that was quite tough. So I just figured out, okay, that didn't work. Back to drawing board. So I basically opened up again for free, and then I thought, okay, so instead of volume, I go for a few large clients. And that's when I kind of came in contact with Cleaves, because they had a big equity raise they were working on. And I mean, we were talking $300 million to my recollection. And that's very big for most players, especially for a smaller player like Cleaves. So they asked me if I could help them. So I basically started working as a consultancy for them. But then I saw a conflict because I was doing this daytime job, and then I was starting to earn money in the evenings, and I didn't really like to do those kind of 2 jobs simultaneously. So I thought to myself I needed to kind of get away from the Santander job and do this full time, because once you start working with shipping, you kind of get it into your blood and you never get it out again. So I knew shipping was the right path for me. And then I met Cleaves, worked as a consultancy, ended up as a full-time job, heading up their research department and kind of building the whole department from scratch. But it was always a thought that I would end up in fund management under the Cleaves umbrella.
I mean, that's super interesting. There are several points I would like to touch upon, but the one that I would love to start with is basically that this is sort of shows that you, through dedication and hard work, actually can sort of create your dream job and basically, you know, go out building in public, getting experience, and like if you're good enough, you know, you will find the great opportunities regardless in the end.
Yeah, I totally agree with that, because when my career path was kind of planned out, I had my plan. I wanted to do a few years in equity research and then go over to fund management. But since I met some challenges at Fernleys, I basically had to try to find a new path. And that's exactly so when I were at Santander and started doing the consultancy on this. In the evenings, I was maybe the Fernley incident set me back 3, 4, 5 years, but then at least I got back on track. And yeah, you can definitely, if you're kind of passionate and wanted to do something, you will get there as long as you work hard enough and kind of think about the path to get there.
100%. So we touched upon it a bit already, your models. I know that you can't sort of tell us everything, but you can sort of say the philosophy. And as far as I understand, it's a very econometric model. Can you sort of, for people who aren't that into analyzing and such, can you sort of give them like a broad view of how you build those models up and how it maybe differs from more traditional analysts?
Sure. So I think the definition of econometrics is defining statistical economics with math or something. So that's basically what I do. So for the beauty with shipping is that you have 2 years inertia on the supply side. So you basically have transparency on the supply side for the next 2 years. So then you have one side of the equation, the other side is demand. And then you put those two together and you get fleet utilization. And fleet utilization decides how much the fleet earns. So I basically spend 80% of my time on the demand side, and the supply side is just given by the order book and some scrapping and cancellations and slippage and so on. So that's the kind of the holistic picture. And what kind of baffled me a lot when I got into the industry was how I did econometrics under my master's degree. I have a dual master extension with funds management and financial econometrics. But when I got into shipping here in Oslo, I started working at investment banks. I remember one senior analyst told me that you must never tell anyone about econometrics, because they will won't take you seriously if you talk about that. And I thought to myself, why? That's so strange. And then I kind of worked with other senior analysts over the years, and I see their methods, and this is for me baffling. I remember one guy, he went to the mountains for the weekend. And when he came back to the office on Monday, he had all the numbers up in his head. So he told me to get out my Excel spreadsheet, and we started typing. A Capesize will earn $25,000 a day in 2021. I'm like, where did you get those numbers from? And for me, having numbers that are round and not kind of odd numbers, it tells me that these numbers are not calculated. These numbers are just someone having a feeling about something. So I thought to myself, there's huge opportunity here, because people are not doing the job correctly in terms of calculating the supply and demand equation. So that's basically I started building my models. I was between jobs. In finance, when you tell someone you're going to a competitor, they tell you, okay, that's fine, but you will have to be at home for 3 months doing nothing. So it's very nice, but for me, I just want to work. So I built all my econometric models during that quarantine, and I brought them with me and tried to kind of get people excited. But still, I haven't gotten any luck. But right now, I think I'm just happy that no one else is doing it, and I hope they forget all about it. And I shouldn't really be talking to you about it either.
Good point. In building these equations, how important is it to sort of become efficient at programming?
It's very important, I would say. The importance in programming is you could either have a big team, do the people management style, a lot more costs, or you can do what I have done, program away workload, and so I would say I think that doesn't really just go for shipping, I think, or finance. I think it goes for the whole world these days, that programming skills and mathematics is very important if you want to succeed being in more industrial companies or in finance.
Quarter is the new way of doing company research. Their first mission is to enable access to conference calls, investor presentations, transcripts, and earnings reports. Their second mission is to create a completely new way for companies to reach their investors and vice versa. Quarter is 100% free. They include companies from 12 markets today and plan to add more during the year. And they have a lot more in store for the back of half of the year. So make sure to follow them on Twitter at QuarterApp. We have to talk about the fact that you are ranked the number one shipping analyst by Bloomberg for several years. I think you have outperformed the market by certainly over 300% since 2014 at least. And so I don't know, the first question is, how do you break down that success? Is it possible to sort of give us an insight into how did you end up becoming that?
Okay, so first of all, let me just explain the Bloomberg ranking, because it's a 1 year moving ranking. So I haven't been consistently ranked number one. There's been a few periods where I've been down and then up again. Just to be clear on that. But I have been ranked number one in 2019, 2020, and 2021 quite consistently. So I'm very, very proud of that because it's a lot of competition out there. But what I do see is, I think it's two reasons I've been quite successful. One is the financial econometrics. So I've been quite good at identifying the cyclicality of shipping. It's always hard to pinpoint when equities are going to turn. Sometimes equity price 1.5 years ahead. Sometimes they only price like 3 to 6 months ahead. But the cyclicality in the earnings and asset prices have been quite accurate on predicting those. And I think the second factor is if you look at the competition on Bloomberg ratings from other analysts, people need to understand that most analysts or research function is a support function for corporate finance business. So there is, I would say, especially for US analysts, there are very few seller recommendations, because the corporate finance department are not really happy with seller recommendations. And of course, it shouldn't be that way at all. And I will also add that Norwegian analysts, to me, appear better at being more pragmatic. And Norwegian investors have more understanding for you not having or a buy recommendation on their company throughout the cycle, because they would rather have an analyst that has better kind of standing amongst investors than an analyst that's just buy and just corporate finance driven. But I think that's one reason why, when you have cyclicality, I've been successful in outperforming my peers. But when the past year, when everything basically had just gone up, then my differentiation has not that big.
Makes sense. So we need to switch gears and obviously talk about the new hedge fund. If we are going to, maybe a good place to start is sort of, did you have this idea for a long time? As far as I understand, there has been a lot of clients maybe requested this kind of fund. So in your mind, how did this process ended up being?
Yeah. So when I kind of understood my financial econometrics model were performing that well, and I was able to outperform the market, I thought I'm adding a lot of value to my clients, advising them on what they should do. But what I should do with this is manage other people's money directly and my own money using this. So so I think back to 2014, I kind of thought I will now just do equity research a couple of years more, and then I will transition. As an equity analyst, is usually go into the industry or you go into fund management. That's kind of two usual paths. So that was my plan, and then obviously I was set back a few years, and then when I did Gersemi research, I had clients that wanted me to manage their money. And I mean, if I were living in the 90s, I would say, hey, cool, here's my bank account, let's go. But I don't live in the 1990s, unfortunately. So there's all these regulations. I mean, I'm positive towards regulations because they gotta protect investors. But I also quite exhausted after several years having to deal with regulations. And especially when regulations keeps me from doing what I believe is in the investor's best interest, but have to take other choices because regulations are trying to do something but not always hitting the mark. Anyways, that's another discussion. So I mean, when Cleaves approached me and I understood their business, I thought, hey, this is nice. They have compliance, they have sales. This is basically exactly what I need to plug my research into and then start managing money. So we decided first we will focus on corporate finance because we had some really interesting opportunities when I joined Cleaves. And then at the opportune time, we thought, okay, now we will start doing the fund management. So I have to be honest, the road has been longer than I had expected. We are now launching a Norwegian structure because that's kind of the lowest hanging fruit. But we are also working on an Irish structure, which will fit better for international investors. So that's where we are at the moment, and we expect first close on the Norwegian structure within short amount of time. But my lawyers tells me that I can't really say too much about the details, but I guess everyone can be able to Google Cleaves and fund management or asset management. And I'm happy to facilitate any request. I have gotten a lot of inquiries already without doing any marketing. And I have people lined up which has been with me for many years. So there's a lot of positivity and a good momentum, and I see a lot of opportunity in shipping going forward.
Sort of in a global context, how rare is a shipping hedge fund specifically? Like, of course, in some countries you can say that shipping is a huge industry, but again, if you look at it in a global context, how rare is a shipping fund in itself?
Yeah, I haven't seen too many examples of kind of the key to invest in shipping is to have a long-short strategy. One can easily say that the easiest way to become a millionaire is to invest $1 billion in shipping, because equities tend to go to 1% of the invested dollar amount over one cycle. So the challenge is to kind of get in at the trough, and then to divest at the peak. If you don't do that, the company is usually bankrupt next cycle or the next two cycles. So the only way to invest in shipping, in my opinion, is to go long short. The other way is to be long only, but that only kind of you subsidize the freight cost over time. So you basically take your money and you give it away to someone else. So yeah, I think it's a no-brainer, the structure of the fund, and I haven't seen too many other funds structured that way. I saw DNB had a long only shipping and oil services fund. They were doing that for surprisingly many years. They had a fixed fee structure, not performance, and you can see the asset under management were just going down and down. And I don't think that's the way to do it. You have to have performance fees and low fixed fees, so you align your interest with investors. You have to invest your own money, so everything is aligned. So you're constantly thinking about kind of what should I do and be conservative through the cycle and kind of play the long short properties of shipping, because there's so much opportunity, and it's just incredible opportunity in shipping if you play the cycle right.
If you look at finance more broadly, have you been inspired by any other funds or any other types of investors that are not necessarily tied to shipping, but has had great success in just finance and equities?
I often get a question kind of, have you had any mentors or inspirations and so on, but it's hard to say yes to that question. My approach has just been sitting in front of the computer, having my spreadsheet up and figuring it out myself. I always thought I wanted to kind of see what everyone else is doing. It's because I don't want to miss out on anything. But before I do that, I want to do it myself, and then see if my approach is better, worse, and kind of take the best from everyone else. But first, I want to figure it out myself. So I don't know. I haven't really kind of read any books about Warren Buffett that has inspired me or anything. It's basically more about my mathematics books that has inspired me, I think, and annual reports.
Interesting, but I mean, you touched upon it earlier, but I would just like to sort of ask the same question again, because a lot of the shipping industry right now is going super well, but as you said, is it sort of, when you're setting up this new fund and you look at the timing, is it almost easier to outperform the market in bad times than in good times?
In terms of analyst recommendations, definitely yes. But in terms of investments, I think one of the hardest things, kind of personally, psychologically, is to lose money in when everyone else is making money. That's really tough. So if you kind of get your short position wrong and the market is booming, that's really painful. But I mean, in terms of going long and short, I think it's quite it's basically the same. The problem going short is that when things are going booming, if you get fleet utilization towards 100%, then you can't really calculate how much they're going to earn, because it becomes more a pricing differential, like how much can they take moving LPG from the US to the Far East. And if the pricing differential is supportive of $200,000 a day, they are making $200,000 a day. And if you are then short, that's extremely costly. But if you're going short, you basically have no downside cap. So I think it's important to be more prudent going short than long. That's my philosophy. So I would rather kind of be 100% long when the timing is right for that. But when the timing is right to go short, I will be a little bit less, a little bit more risk averse.
Makes sense. If you look at, you touched upon it, but the pressure of managing funds, and obviously with the great track record, etc., how do you think that component plays in, sort of the pressure in performing when it's like real money at stake all the time and real skin in the game?
Oh, it's I managed my own money for a couple of years. It's and I manage the big portfolio in Santander. It's you don't have to be professional. I've learned that over the years that when you start investing, you maybe invest maybe 1,000 Norwegian kroners. It can be a very small amount, but you feel the pressure, and you're gonna stay all day looking at the screen and like, oh no, I lost 2%. What a disastrous day! But then suddenly you have managed $2 billion, and then the money, the amounts just goes beyond what human mind is able to comprehend, and then it starts getting more professional approach. So I don't have. I've been getting used to kind of losing the first 20% of a share bull run, and I don't have any problems with that as long as I get to the next 20%. You just need to be pragmatic and always doing what's right, and that's where I rely on my mathematics, because when you try to do the gut feeling, it's usually always goes wrong, or 50-50 at best. So I gotta rely on my mathematics and just have a professional view, and don't let it ruin my day if my portfolio is down 2%.
Sounds like a good plan. If we sort of look at some forecasting ahead in the future, do you have any ideas that you would like to share now that you think you are very bullish on going forward in specific sectors or specific industries?
So even though I kind of changed my hat in September, I think my message from all the reports we sent out in July and the oil tanker webinar in early September is still quite, or some of them are still accurate. So for oil tankers, I believe we are seeing the signs in the Arabian Gulf of more activity. And for me, it seems like such a no-brainer, because the order book is so low, so you have transparency for the next 2 years, and at the same time, OPEC Plus are expected to increase by 400 million barrels, 400,000 barrels a day going forward. I personally think they will have to stop a bit in the first half of 2022. They are communicating that they will just keep on increasing. But regardless, you will have a lot of new oil coming into the market, and you see, I think oil prices topped $80 a barrel today. So obviously there is demand for more oil in the market. And we already see then the winter market is coming in October, usually, and lasts until February approximately. And then for dry bulk, I'm getting a bit concerned, I have to say. So after I kind of changed hats in September, and then I was free, not bound by all this restriction as an analyst in terms of trading. So I actually sold a lot of Golden Ocean at 100 crowns plus, because more going into first quarter is usually low season, and this year you have the Beijing Olympics coming in, and they want blue skies. They want the TV pictures to be perfect. So they have cut the steel production already, and they will cut coal consumption. I expect them thermal coal will be cut. So you have all these kind of factors pulling the brakes going into Q1. And then you have the gas markets, which are just unbelievably strong. I don't really understand why freight hasn't really started moving yet. Or I saw LNG started moving yesterday, so I think we are probably in the innings, and LPG has started moving over the past few days as well. But I mean, to move a ton of LNG from the US to Far East right now, it's the economics in that move is immense. But I mean, we have energy crunch across the world going, or northern hemisphere going into the winter right now. So it's going to be really interesting to see how that plays out. Europe is lacking energy, Far East is lacking energy, and the US is lacking energy. So there's no inventories to draw from coal, LNG, or natural gas, and so on. So I think it will be a bumpy ride for the next 6 months in terms of electricity prices and so on for people. But I think it will transpose into freight for gas as well.
On a sort of confidence scale, what part is sort of the hardest thing right now to get your head around in terms of how confident you are of a specific scenario playing out?
Oh, that's a tough question. I'm a bit I'm a bit surprised on LPG because LPG prices in the US are so high, so you don't have the arbitrage that you see on LNG. So I'm looking to inventories in the US. We would like to see inventory bills in the US. Well, I think the biggest uncertainty is in my head, dry bulk is kind of we are extremely high, and for me, I think dry bulk will earnings in dry bulk will collapse into Q1. I think you could see in Capesize earning below $10,000 a day over the next few months, and now we are around 60 to 70. So that if that plays out, that will surprise a lot of people, I think. But that's just temporary, temporary, and then you don't have any fleet growth in the next 2 years, so it will just be a temporary dip. But that could be a big opportunity if that plays out. Share prices will likely be taken by surprise by this earnings movement. And I think a lot of generalists, which have been moving into the segment over the past few years, we have seen the capital flows. I think a lot of those guys will think, "Oh no, this is just like 2015 all over again. What's going on in shipping? We can't invest in this, too volatile. We just have to get out and take our returns." They have made a lot of money already, so that could easily happen. You see capital outflow from shipping if in such a scenario, but it's a big uncertainty. Big uncertainty.
Just a few more questions before we wrap up. If we look a bit more or further ahead, obviously there are new regulations taking place. There is a big concern about, of course, cutting emissions enough. If you sort of look at maybe on the technology side, are there anything that interests you particularly going forward? Do you see like some big shifts moving forward in shipping, maybe in like a 5-year horizon or even 10 years, for instance?
Yeah, so I think this decade will kind of be the decade of regulations in shipping, and personally, I think it's such a good move that we are finally seeing some real action, because obviously we have big problems in terms of the climate change and all that. So it's very positive to see the industry taking responsibility and also seeing the IMO putting in place regulations. I think we spent maybe 3 months, more or less, in Cleaves Securities and the research department trying to calculate how this will impact shipping. So we looked at the EEXI and the CII, and we took the whole fleet, the global fleet, besides kind of trawlers and those small vessels, but basically the whole commercial fleet, and tried to calculate on each vessel how much will this hit. So what we ended up after 3 months finding out that it was too complex. We needed kind of the technical sheet on each vessel to be able to calculate it correctly. Because whenever we took those calculations and we asked the companies kind of how does it look, we got a different answer. So it was quite frustrating. So for me right now, it seems like a bit black box how this will impact the industry. It will definitely have an impact, and this will definitely impact some segments more than others. For instance, older LNG vessels, they don't come out too well in those calculations. But I think there's a lot of opportunity there, and it could. What is happening is people are not investing in shipping because they are uncertain. So if you buy a vessel today, potentially that investment, which used to have a 25-year depreciation profile, 25-year life, now suddenly only have 10 years, and then do I have to invest $10 million, take out the engine and do all these kind of things? Or so people are not willing to invest in new buildings, and that means the order books stay low. Look at dry bulk. You have immense earnings, but still the order book stays low. So that means you could have a decade in shipping without the necessary investments to move goods. That could create challenges for the global supply chains, but definitely could also, in that scenario, you will also have extremely high earnings and cash flows for ship owners. If you look at containers right now, you see that kind of scenario where the supply chains have globally has kind of collapsed a bit, and then that creates challenges.
If you only look at the technology and sort of what types of fuel ships are going to be using in the future, do you have any favorite solutions that you're seeing right now?
Yeah, I honestly don't have it. What I do is I read what other people are writing, and I'm not that kind of technical industrial guy. So I try to read as much as I can and kind of stay on top of the issue. But it's challenging right now because there's no clear path to kind of zero emission. All the kind of suggestions like ammonia and so on seems to be on the drawing board technically at the moment. It's too costly to produce that amounts needed with the current technology. So when I hear politicians always talking about zero emissions, he always seems to talk about like, how will you get there? No, we will base it on new technology. I mean, but what's the new technology? No, someone will figure that out. I mean, it doesn't seem to be. It's a big concern for me that every politician is responding new technology, or we should cut production of oil. It's not kind of. Neither of those solutions seems to be, to me, to be the real solution. So, yeah, it's going to be interesting to see, and hopefully we will cut some emissions soon.
Very much so. So just the final question in terms of the way you are communicating with the shipping people. And I mean, you have a very large following on Twitter, for instance. How important do you feel it has been to sort of share ideas publicly, get feedback on it, being transparent in what you're thinking, being able to get that feedback? Is that something that you feel has been very valuable?
So going back to what I talked about earlier, the kind of, as a 20-year-old student trying to building financial models and understanding that there was an information asymmetry in the market, and also information inefficiency, I always thought I should try to do something to balance that and democratize information flow, because there's so much information sitting in over-the-counter markets at brokers, and that information is priced into the equities. But the retail investors, they only see the share price going up or down. And then maybe at the end of the day or the next day, they understand why that happened. That's what's my position for many years. So I think it's important to democratize the information. So that's basically, I would kind of say, idealistic motive behind it. And then obviously I've used it as a distribution platform as well, building clients list. I mean, here you have free research, but you needed to register your name and email to get that free research. So that's obviously valuable to build those lists of people genuinely interested in shipping. So that kind of list can be used towards other things, obviously. So that has a lot of value. So I think, and I'm very happy to see that there's so many people globally that's interested in shipping, because I'm only tweeting about shipping. There's nothing else. I don't have any kind of political views on Twitter. I don't have any kind of that. It's just shipping. So that's very nice to see so many people interested.
Perfect ending. Joakim, thank you so much for joining. It was a pleasure having you on.
Oh, well, my pleasure, Christopher. Very, very nice to be here with you today.
Hi everyone, Christopher here again. Just a few things before you leave the show. If you like this episode, it would be great if you could give it a review and also share it with your professional network. If you want to get in touch with me, Twitter is the place. Just go to @ChrisVonheim. You can also find this information in the show notes. Hope to see you tune in to the next episode, and take care.